Welcome to the next video, everyone. Caleb Fiarley here, sitting down with my friend Sean Dunn at Director's Mortgage. He's a loan officer here in Eugene, Oregon, and today we're just going to talk about basically the loan process and really zero in on, how do we help support first-time buyers. So we'll talk through a little bit about that. Share some good information with you, but let's get started with Sean. Just share a little bit with us about your background and what got you into your job here at Director's Mortgage.
Yeah, so I came to U of O. That's when I came to Eugene. I've been here ever since. I actually started in the mortgage industry as a marketer. That's kind of what I had studied and what I'd been doing before. So I started marketing for a mortgage company here in town, and then realized that I really liked what the people were doing, originating loans, helping people find houses, get home loans, and that sort of strategic aspect. So about 4 years ago, I got my own license. That's when I came to Director's Mortgage. I've been here ever since, and started originating loans and helping people on that side.
Sweet. Yeah. Fantastic. Go Ducks.
Right.
A couple of U of O alumni here. So tell us a little bit about your wisdom and your experience on what's the best first step for a first-time buyer.
Yeah, I think there's a sort of stigma as a first-time home buyer that I like to try and get over, which is you don't know what you don't know. So meeting with a mortgage lender like myself is, and here's the big first one, totally free.
Yeah.
So come in, let's chat on the phone, let's talk through it, see what your rent is, what your income looks like. I find oftentimes there might be a person who thinks they're game planning to buy a house in the next year, but they're doing it entirely wrong because they didn't know what the target was. They haven't met with anyone yet. So oftentimes I just want to get people in, chatting, looking over the paperwork, and if you're not ready today, that's totally fine, but let's make sure you're set on the right path so you can buy when that time does come.
Right.
So I think the best first step is just to meet with someone. I'd love to, but really any local lender, just so that you can get that path set before you.
Yeah, I hear you. That's another thing too on the real estate agent side is, I sit with folks that are buyers sometimes and they're really wanting to wait. I want to wait. I don't want to talk with anybody. I want to look at houses online. And really you're better off to go ahead and have a conversation with a lender or a real estate agent, kind of talk about your timeline so that you can develop a plan. One
of the biggest things I think that surprises first-time home buyers, someone asked me, what's the perfect client look like? And I realized it often is a client that starts this whole process and gives themselves enough time. It always stinks when that person calls in, hey, I need to start the process. My 30 days just got delivered to me in my rental. Yeah. Or, my lease ends July 30th and today's June 15th.
Right.
You're not giving yourself enough time. You're going to have U-Hauls packed. You're going to be stressed pretty much the whole time because you're all trying to rush it. So the perfect client has come with months to give themselves time to spare. The one nugget that always surprises people is that if you close your home loan, let's say in June. So if you close on your house in June, you have no July mortgage payment. So if you close June 1st or June 30th, you have no July mortgage payment. So it's the same, for any month. Yeah. The best clients are the ones that time it, in my opinion, that time it so that they may still pay rent that month, that they don't have a mortgage payment, but at least they never had to double pay.
Right.
And then they gave themselves, 40, 45 days to move. They give themselves time to paint the inside of the new house without all their furniture in it.
Yeah.
They give themselves time to go back and clean the rental so they get their full deposit back, rather than a weekend with U-Hauls loaded and dogs and cats running everywhere.
Right. And going back to your first statement, there's a lot to keep track of. Moving is stressful anytime you move. And so just having the advocacy of a loan officer, a real estate agent, it's really helpful to have somebody that will bounce ideas off of, share experience and expertise with. So that's a great point.
Yeah.
Share with us now a little bit about, what are some loan products? So different loans that might be a good fit for a first-time buyer.
Yeah. I think that the biggest myth or sort of stereotype that can be easily overcome is the 20% down myth.
Yeah.
I do way more 3 or 5% down loans than I do 20% down loans. We all want to get there someday, but if you tangibly do the math and see the opportunity costs that you'd miss out on in the years it would take you to save 20% versus buying a house with 3% down and then building equity instead of rent, there's a little bit of mortgage insurance, but it's historically cheap right now.
Yeah.
So again, come in, see it in paper, and I think that you'll want to do less down. So there's options like the one I'm doing the most of right now is a conventional loan with as little as 3% down. That's for first-time home buyers specifically. if you have good credit, which is, in the 700s, that would all qualify as good, then that mortgage insurance is pretty cheap. You get in, you start building that equity.
Nice.
FHA is a more flexible loan product. It requires 3.5% down, so just a touch more. But if you're in really anything over 620, and that can be a really good loan product for you. It's all going to have aggressive rates, aggressive mortgage insurance rates. So really breaking that down. It does not take much. And then with both those loan products, you can use a gift from a family member. You can use, you can borrow against a retirement fund. You can get local grants. You can get really creative as to where that gift comes from. So if it's a $200,000 house and you need $7,000 down, I think more often than not, people find a way to make that work than they might think if it's not already sitting in their bank account.
Right on. So, and with that, another follow-up question would be, what are some kind of taboos, like do not do the day of closing or the week before closing?
Right. So anytime I get a new client into contract, so they've been pre-approved, they've written an offer, and it's been accepted, I send them the 10 commandments for the next 30 to 45 days.
Nice.
So the 10 commandments are, don't change your job. You'd think it sounds needless to say, but I've had some people who thought, well, yeah, I was in the middle of closing my house, this new job offer came and it pays more. Why is that an issue? Well, we verified a lot. Now we need to verify that it pays more, and that can cause delays. The biggest one is don't change anything about your credit. So people also ask me, how long is a pre-approval good for? It's as good for as long as you don't change anything.
Right.
So don't buy a new boat, or that will lower what you can afford for a house. A common one is don't go finance all your new furniture before you close, because we don't want to see that new debt come up. Any lender is going to pull a credit refresh at the 11th hour. So you don't want to see, if you buy a new boat, make sure it has a cabin that you can sleep in. That'll be your new house. Yeah,
really good point to make. So, even if you're working with me and we're buying you a house, once we write the offer is accepted, the house isn't yours yet. We got to go through inspections, we got to get an appraisal, and then once all of that's been gone through and we're done with that, basically what happens is they do a final once over with everything. So they check the title again, they check the loan, they make sure everything is still top notch, and then the transaction is recorded, and that's where money is actually funded, title is transferred, and that's when it's actually your new house. So a lot of times there's some wiggle room there, especially if somebody's like just sold a house, they've got money in their pocket, they're like, hey, let's go buy the new car. Right. And that can sometimes drop you out of being able to afford the new house.
Yeah, due dates, like close dates, are like baby due dates. That's some good advice I got that I tell most of my clients. Everyone wants it to be this day, but sometimes it happens early, sometimes it happens late. So you always got to build that buffer in. It's like a baby due date. That's a target.
Definitely. Awesome. Well, I think that's enough for now. Any last parting words of wisdom for our people checking out the video?
Yeah, I would just say the one other thing I'm going to take a quick second and say, because I love this part, is if you're looking at buying your first home, don't be scared of possibly buying something like a duplex or something that may make a good rental property in the future. Nice. So I bought my first house, owned it for 2 years, sold it, and then bought a duplex that I live in currently. Now I'm on to buying my next house, but then keeping the duplex as a rental.
Right.
So I turned that first 3% down into a duplex and another single family home. So the stats, you would know them better than me. You stay in your first house for 4 years, maybe 7, I think might be the average on the long side. So when you're looking at your first house, look at it with that sort of lens. Is it one you can clean up and then sell for more money? Is it one you could keep as a rental? It's not going to be your forever house or your dream house. That's your intro house. So that's an important thing to look at.
Nice. I love that. Yeah. Really good point to make. We're all looking at, we're young, we're in our prime of our life right now, but we do want to plan for the end, and to have passive income coming in from real estate investment. I mean, what a great way to help take care of our parents and our other loved ones when they get older, and then to just be chilling on the beach.
Maybe retire a little early.
Yeah. So, well, thanks so much, Sean. I appreciate the time, and until next time, guys, cheers.